Welcome to the Guide to Company Cars. If you are thinking about how to run your cars and vans through a business, there are many tax issues to consider. In this presentation, we will help you choose on the best option for you. Company car tax. If you're driving a car provided by your employer and it is available for you to use personally, it is viewed as a taxable benefit. HMRC attaches a monetary value to the private use of the vehicle and collects tax on it. This is what we know officially as benefit in kind tax. There are two separate benefit in kind tables, one for those driving a car registered after the 6th of April 2020, and for those that drive a vehicle registered before that date. Calculation of the tax is based on CO2 emissions of the specific car provided, but combined with other factors, these being one, the list price or P11D value of the car before non-taxable items, e.g. road tax, and after optional extras. Two, the tax rate you are in, whether you're 20%, 40% or 45% taxpayer based on your annual income. And finally, the type of fuel the car runs on. The easiest way to work out the tax you pay is by using the HMRC's own car tax calculator, which will ask you all the above questions, plus any tax reducing factors like contributions to the initial cost of the car and the amount of time you actually use it. Petrol and diesel vehicles. The tax bill on diesel vehicles will typically be more expensive. There is a 4% surcharge above petrol cars. Because of their lower CO2 emissions, hybrid cars are a better alternative. These fall into a lower band, and there is even a band for hybrid cars that don't exist. Personal tax on company van benefit. If a vehicle class is a van, the benefit is taxed slightly different compared to a car. Instead of looking at the list price and the CO2 emissions, there's a flat rate the HMRC provide. There's also an option for zero emission vans, and this is a lower taxable benefit compared to a standard company van. Fuel. If your employer provides fuel for your company vehicle, this will give rise to a separate taxable benefit in kind. If the fuel is provided for a company car, you take an appropriation of a flat rate figure depending on your vehicle's CO2 emissions. If the fuel is provided by a company van, a standard flat rate figure is also used as it's the same situation as the van benefit itself. Mileage rates. If you use a vehicle for a genuine business trip, using either a company car or a private car, your employer can reimburse you by using the HMRC's flat rates. According to HM Revenue and Customs, the trips are seen as business-related travel when the work can't be done unless the trip is made, and the trip needs to be somewhere other than the usual workplace to carry out the job. Typically, this is home to clients' premises or office to clients' premises. There are different rates depending on whether you use a company vehicle or a private vehicle. It's worth noting, if your employer does not provide you the maximum allowable under HMRC, you can make an additional tax claim on the difference. But if your employer reimburses you above the standard rates, the difference is subject to income tax. Leasing or buying a company vehicle. For an employer, whether the vehicle is leased or purchased may have substantial differences to the amount of tax relief obtained. In either situation, the benefit in kind position of your employees is not affected. Purchase. If you purchase a vehicle, you'll be able to claim capital allowances on it. This is the set percentage that can be offset against your profit, and it depends on the vehicle's CO2 emissions. Hire purchase. Under a hire purchase, legal ownership of the vehicle passes to the company at the date the contract is signed. You then simply pay for the asset over a period of time, normally on a monthly basis. Monthly hire purchase repayments will contain both an interest and capital repayment element. The capital element is not an allowable deduction against business profits because you've already claimed the capital allowances, whereas the interest element is. You still, however, claim of the capital allowances I've already said. There are two types of lease. There are operating leases and finance leases. An operating lease is where the business pays a rental payment to the legal owner of the asset, and all the expenses incurred can offset the business profits. A finance lease is where the business has basically paid for the car through its payments, but at the end has to return the vehicle. The business will therefore depreciate the asset over its normal life and will charge depreciation and interest payments against the business profits. This is the only occasion when a business can get tax relief for depreciation. In either situation, the asset borrowed from somebody else, so no capital allowances can be claimed. Where the vehicle in question has CO2 emissions of 100 grams or more, 85% of the lease cost will be allowable. If your business is VAT registered, you can also claim 50% of the VAT relating to the lease of company vehicles, regardless whether it's an operating lease or a finance lease. Electric vehicles. With the sale of new petrol and diesel cars set to end by 2030, increasing fuel costs, and the ongoing threat of climate change, it is little wonder that more people than ever are considering changing to electric vehicles. But before you take the leap, it is important to make sure you're clear about the tax implications of electric car purchase, hire purchase, PCP arrangement, or lease. Can I claim capital allowances on the purchase of an electric car? Yes, but the arrangements are different from those you can claim for petrol and diesel vehicles, and the amount you can claim will be reduced by any personal use if you're a sole trader or partnership. Unlike other cars, electric cars qualify for first-year allowances. This means you can't deduct the cost of the car from your profits before the tax and accounting period during which you purchased the vehicle. If it's also used for personal journeys, you're able to claim for a portion of the time you use for business journeys, but this is only for sole traders and partnerships. Because you're likely to reduce your pre-tax profit significantly, you may want to consider in which tax year you make the purchase. The benefits can be greater in a year with higher income. And also, if a company, you need to consider that corporation tax rates will be going up next year. Can I reclaim VAT on the purchase of an electric car? As a general rule, no. However, if you're VAT registered and the vehicle is used exclusively for business, you can, but this is only likely to apply in the terms of pool cars or taxis. What about personal contract purchase? PCP finance agreements are a very popular way of purchasing vehicles nowadays, often considering of a moderate interest deposit, regular monthly payments, and then a large balloon payment at the end to purchase the car outright. However, crucially, PCP arrangements will usually be considered as a finance lease and not qualify for first-year capital allowances. As a result, if you buy an electric car, it can be significant tax advantages to opt for a hire purchase agreement rather than a PCP arrangement. However, there are limited circumstances where the PCP arrangement can actually qualify for first-year allowances. This is where the balloon payment is lower than the value of the car when you actually buy it. What if I lease an electric car? If you lease an electric car, you can deduct the cost of your taxable properties, and if you're a sole trader or partnership, you should proportion it on the business use and the non-business use. This spreads the cost, but you lose the upfront capital allowances costs when you're purchasing an electric car. But the non-tax benefit of leasing is obviously if the technology changes, you're not stuck with an electric car with old technology. But I don't believe that's true. Can I reclaim VAT on the lease of an electric car? There is 50% can be claimed, but that's the same whether you have an electric car or not. What mileage claims can I make for electric car journeys? If you're leasing the electric car for your business, you cannot claim mileage at all. This is different if the car is provided by your employer, whereby you can claim 5p a mile. However, if you pay for your own lease or own your own personal electric car, then you can still claim the 45p or 25p mileage rates irrespective because it's electric. If you charge it at home, you can claim 5p a mile even if the business pays for the lease. How about charging points? You can claim back the VAT on installing chargers at your business premises. There is also a government grant, but there's no government grants at the moment for installing at home unless you're a tenant, you're renting the personal property rather than leasing it, mortgage or personal ownership. Other benefits of EVs including exemption from congestion charge, lower emission zones, vehicle excise duties, and so on. There is also the thing about electric vans. The rules changed last year, and so actually there is no taxable benefit on electric vans. And the final point to raise is on salary sacrifice. If you work the car out as a salary sacrifice for the employee, then there is benefits both to the employer and the employee. Thank you.